Welcome everybody. Just before we get started, because these AGMs and the things we speak to you about have to go to the whole market, a lot of the script is put onto the ASX, and accordingly you're going to find that Paul and I and others are going to have to probably read from it because we have to give the same script. So excuse us if we're going to be reading what we say to you. But in any event, welcome everybody. It's really good to have you all here. This is the 2016 Annual General Meeting of the Cromwell Corporation Limited, as well as Cromwell Diversified Property Trust. As you know, we're what we call a staple security. Sorry, I lost the word for a second. A staple security, so that's the two entities stapled together. My name's Jeff Levy. I'm the chairman of our Cromwell Property Group and your chairman for today's meeting. Before I open the meeting, I would like to introduce you to my fellow directors. So just pointing across, our CEO, Paul Waitman. Next to him is Michelle McKellar. Next to her is Jane Tongs. Next to her is Richard Foster. And finally, at the end, there's Andrew Connick. We also have Mark Wayner, who is based in South Africa, and because of prior commitments and our inability to change dates, he was unable to come, but he's regrets it and sends his apologies. But we have had him on the phone today, and we've been discussing things with him as well, so he's right up to speed with everything. I'd also like to particularly welcome Nigel Badders over there, who is our partner from Pritchard Partners, the Cromwell's auditor, and if anyone has questions of him later or when we discuss the accounts or afterwards, please feel free to talk to him directly. So now I'm going to formally open the meeting, and I'm informed that there is a quorum present, and I declare each of the meetings open. Cromwell's key objective is to provide you, the security holders, secure, stable and growing distributions, and we are pleased that we're able to increase distributions per security by 4.3% to 8.2 cents per security in the 2016 financial year. These results were ahead of previous market forecasts and consistent with our trend of growing distributions throughout the property cycle. The 2016 financial year saw continued heightened competition for quality commercial property assets throughout Australia. Offshore capital currently comprises approximately 50% of transaction volumes, and international interest in investing in Australia remains very high. Cross-border capital is the market maker in every major commercial real estate market, bar the largest, which is the United States of America. Capital providers are now increasingly making allocation decisions on a global basis, trading off the pros and cons of investing in key destination cities from London to Paris, New York, Shanghai and Tokyo, as well as to Sydney and Melbourne. This is the market in which we now compete. The last few months have also contained some surprises. In June, Britain voted by a narrow margin to leave the European Union, and then earlier this month, America voted to elect Donald Trump as their next president. The last time I said that, people started clapping, but I'm glad you didn't. These two results were unexpected by most, and it is likely to take some time before their impact is fully understood. However, 10-year Australian government bond yields have already risen steeply from a low 6 months ago. With further increases forecast, it will be interesting to see how many boats lifted over the last few years by the rising tide of monetary stimulus and artificially low interest rates are left high and dry by an outgoing tide. As you have come to expect, Cromwell remains true to its strategic objectives. We continue to target an 80-20 balance between direct property investments and fund management earnings, which we believe will help to provide secure, stable and growing distributions through the property cycle. Our balance sheet direct property strategy remains consistent. we continue to internally manage a property portfolio that provides a solid base of dependable and defensive earnings, balanced by a smaller portfolio of active assets that can deliver outperformance. Last year, we achieved 18% of our earnings from our funds management business. We will continue to integrate our global platform, talk to capital partners, and develop new products. It was particularly pleasing to see the recent successful launch and first close of the Cromwell European Cities Income Fund. And there are a number of other exciting initiatives in the pipeline that will help us achieve our target. I would like to take this opportunity to thank in particular my fellow board members and the Cromwell team, many of whom are here today, for their collective efforts again this year. We are here for the simple purpose of continuing to deliver, as I've said before, secure, stable and growing distributions for you, our security holders. And we will be doing our absolute utmost to make sure we deliver on this again next year. I would now like to hand over to our CEO and Managing Director, Paul Waitman, to bring you up to date with the business. Thank you.
Thank you, Jeff, and welcome to security holders and guests. Cromwell's board and management are pleased with the group's performance in the 2016 financial year. Our operating profit of $164.5 million for the year to 30 June was a strong result, boosted by a number of one-off transactional items. Overall profit per security was 9.41 cents, and as Jeff said, distributions per security increased 4.3% to 8.2 cents per security. Cromwell's strategy of realising gains and recycling capital and our internal management model has created value from active management of our assets. It's generated performance fees and it's allowed us to act opportunistically and to effectively manage downside risk. During the last financial year, property valuations increased by $250.3 million, net of property improvements, leasing costs and incentives. Net property earnings on a like-for-like basis increased 1.6%, with increases in rental income being offset by some vacancy in our Brisbane and Canberra assets. Overall, tenant quality remained strong, with government and government-related entities contributing 46% of gross income. As at 30 June, the portfolio had a weighted average lease expiry profile of 6.3 years and a vacancy rate of 10.6% compared to the national CBD office average of 11.9%. Our New South Wales and Victorian assets continue to perform well, and we're actively managing the vacancy in our Queensland and Canberra assets. We expect tenant demand outside Sydney to remain weak, with subdued growth in like-for-like property income in the next few years. Cromwell was a net seller of assets in the financial year, selling $209 million of assets with a net gain of $19.4 million, which was equivalent to about 1.1 cents per security. The assets we sold were 43 Bridge Street at Hurstville, New South Wales, which sold for $37 million in July 2015. 4 Bligh Street in Sydney, which sold for $68 million in August 2015. Terrace Office Park in Brisbane, which sold for $31 million in September 2015. And 100 Weymouth Street in Adelaide, which sold for $73 million in December 2015. A proportion of the proceeds from sale were used to repay debt, with the balance being held as cash. Given the heightened competition for assets in all markets, our preference is to continue to recycle capital from disposals to value-adding opportunities in our existing portfolio. With that in mind, we're continuing to invest $300 million for the future with the redevelopment of North Point Tower in North Sydney, and the development of the new Department of Social Services National Headquarters in Tuggeranong Office Park in the ACT. Both of those projects are on track and will contribute earnings growth and valuation uplifts in the near future. Construction is well underway at North Point, while construction has just finished at Tuggeranong. We're also delighted that Tuggeranong has been officially awarded a 5-star Green Star rating, representing Australian excellence in environmentally sustainable building practices. External funds management earnings increased to $29 million from $4 million in 2015. The wholesale component of earnings increased substantially from $2.6 million to $19 million, reflecting high trading activity and a full 12 months contribution from our Europe business. Total assets under management increased to $10.3 billion. An increase in retail external assets under management from the group's unlisted direct products and interests in Phoenix portfolios and New Zealand's Oyster Group offset lower wholesale assets under management relating from realisation of assets in Europe. During the year, the European business traded 2.4 billion euros of assets on behalf of investors and had investment capacity of around 1 billion euros as at 30 June 2016. The high level of trading activity has generated good transactional fees, even though we've been cautious in deploying the additional investment capacity, especially where we don't see value for our investors. Since its acquisition, the European business has been progressively integrated into Cromwell's platform, and the business will be officially rebranded to Cromwell Property Group in early 2017. As we look to reposition the European business so that it has a broader, more discretionary focus, we expect that a number of older funds will naturally wind down. And we're required to account for the impact of the change and the rollout of those funds, and given prevailing market conditions, both now and in the future, we've decided to take a conservative approach and write down $86 million of goodwill associated with the business to reflect that roll down of older funds. During the year, we made a number of senior hires in Europe. There are a number of new products in the pipeline, and earlier this month, we also announced the launch and successful first close of the Cromwell European Cities Income Fund. A European platform has a tremendous future. Retail funds management earnings increased to $10 million from $1.4 million in the previous year. This was mainly attributed to $7 million in performance and disposal fees realised from the sale of the asset in the Cromwell Box Hill Trust. Unit holders voted to sell after Cromwell received an unsolicited bid for the asset at a 34% premium to its pre-construction as if complete valuation. In New Zealand, Oyster Group increased assets under management by 34% to 983 million New Zealand dollars. Growth came from a broad range of initiatives, including the 100 million New Zealand dollar cider building syndication, which closed fully subscribed within a matter of days. Oyster's growth is great testament to the strength of the business and the value that they provide their investors. Distributions of $6 million were received for the June quarter from our 9.83% stake in Investor Office Fund, or IOF. And since it's been in the papers this morning, I'd like to take the opportunity to refer to continuing media speculation regarding our intentions towards IOF. Since we acquired the 9.83% interest of the units of IOF on 12 April 2016, we've held that interest just as a major unit holder. We submitted a proposal to the Board of Investor Listed Funds Management Limited in its capacity as responsible entity of IOF on Monday, 14 November 2016, to make a fully funded cash offer to privatise IOF at $4.45 per IOF unit. The proposal was subject to a number of conditions, including 40 days of due diligence and Foreign Investment Review Board approval. We made it clear that we wouldn't seek exclusivity and we wouldn't be seeking a break fee. Following discussions with IOF's independent chairman, we submitted letters of support from debt and third-party equity providers for the proposal. On Tuesday, yesterday, we received notice from the directors of Investor Listed Funds Management Limited that they were ceasing discussions as they didn't believe the framework or the price of the proposal to be compelling or attractive to IOF unit holders, and therefore they wouldn't proceed to provide us with access to due diligence and wouldn't be considering the proposal any further. Shortly following the receipt of this letter yesterday, Investor Wholesale Funds Management Limited, in its capacity as responsible entity for the Investor Commercial Property Fund, if you're following all of that, the owner of the manager of IOF, announced that it had entered into an agreement to acquire Morgan Stanley's 8.94% stake in IOF for $4.23 per IOF unit, about 22 cents per unit cheaper than what we had proposed. So we think this is a pretty disappointing outcome for IOF unit holders, and we think the proposal that we put forward was compelling in the current market environment, given the fact that it was an all-cash offer made to all unit holders on behalf of our third-party investors. It was at a 5.7% premium to IOF's 30-day VWAP, or volume weighted average price, of $4.21 per unit, and a 5.2% premium to IOF's last stated NTA, net tangible asset backing, of $4.23 per IOF unit, and of course to Investor Wholesale Funds Management Limited's acquisition price from Morgan Stanley of $4.23. So we continue to seek the opportunity to undertake limited due diligence in order to make a cash proposal. We'll see what happens. Cromwell's a conservative business, and we have a clear focus on capital management, gearing levels and cash reserves. We place a priority on maintaining our ability to access diverse sources of capital at different points in the cycle. At 30 June, we had cash and cash equivalents of $95.6 million. Gearing was 43%, down from 45%, and NTA per security was 81 cents, up from 65 cents, the corresponding point last year. Earlier in the year, Moody's Investor Service assigned a Baa2 secured debt rating for Cromwell secured debt and a Baa3 issuer rating for Cromwell. Our debt facilities continue to be well diversified across 8 lenders and a convertible bond issue, each with varying maturity dates. Future interest rates are hedged through an interest rate cap to May 2019. Our average interest rate fell to 4.6% during the financial year, resulting in a debt interest expense reduction of $4.9 million, and this trend is likely to continue as existing out-of-the-money interest rate hedges roll off and expire. During the year, we continued to invest in our operational capabilities. In addition to integrating the European platform, we undertook a range of new sustainability initiatives, including the adoption of a global sustainability framework. Cromwell's been reporting on its sustainability initiatives and performance since 2009. We're committed to sustainable business practices, and our new framework is designed to improve performance and support a responsible and balanced pathway to business success. Copies of the 2016 Sustainability Report are available today for anybody who is interested and would like a copy. Looking to the outlook for the 2017 financial year, Brexit has meant uncertainty for UK commercial real estate markets. This is tempered by the fact that many of our private equity investors are hoping to be able to invest to take advantage of market dislocation. In Europe, which we must remember is a broad and diversified market of 500 million people, there's been minimal impact so far, and indeed we've seen increased investor demand in a number of areas that we operate in, including Germany, the Netherlands and the Nordic region. Australia started the year with a domestic economy that's still in a transitional phase post our mining boom. A property market that's pretty close to being fully valued, and with oversupply in residential markets and general lacklustre tenant demand for office markets other than Sydney. Additionally, the new US President-elect and a still slowing Chinese economy means that we must remain cautious and focused on managing the downside risks that might impact on our business. Taking into account these risks and making conservative assumptions in transactional revenue and rental income, as well as the short-term impact of the development program we're undertaking on our earnings, we expect 2017 financial operating profit of not less than 8.4 cents per security and a distribution of not less than 8.34 cents per security. I'd like to thank the board for their support over the last year and also acknowledge the hard work and efforts of all of our staff in the 15 countries in which we operate. We're now an incredibly culturally diverse organisation, and harnessing this diversity and working together as one team will enable us to create great future value for all of our security holders. Thank you.
Thank you, Paul. We're now going to move towards the formalities of the day. Just some of the rules. Those security holders and proxy holders who have registered to vote will have received a yellow voting card. Non-voting attendees will have received a blue non-voting card, and visitors should have received a white visitor's card. Diversification is the name of the game, you see. A number of proxies have been received, and in line with the requirements of the Corporations Act, details of all proxies in respect of each resolution will be recorded in the minutes, irrespective of whether the motion is voted on by a show of hands or on a poll. Before each resolution is discussed, I will advise details of the proxies which have been received. You should note that for each resolution, I intend to vote the undirected or open proxies in favour of that resolution. I take the opportunity to note that each director who holds Cromwell Property Group securities have voted in favour of all resolutions, except of course where they are excluded by the Corporations Act or the Australian Stock Exchange listing rules from voting on a particular resolution. Shortly, all of you will be asked to vote on the resolutions to be put to the meeting. You will have the opportunity to ask questions or discuss specific resolutions. The first 4 resolutions relate to Cromwell Corporation only, and the 5th one relates both to the corporation and the trust. Unless there are objections from security holders, I propose that Resolution 5 be presented to the meeting and discussed and voted on concurrently rather than separately for each of the company and the trust. This approach will save pure repetition. If any security holder considers that Resolution 5 should be considered separately by shareholders of the company and holders of the trust, I can adjourn the relevant meeting to have the matter considered separately. I move the proposal that Resolution 5 be discussed and voted on concurrently. Could I have a seconder, please? Thank you. Are all of you in favour? Anyone against? I declare the motion carried. Okay, anyone present who is not a Cromwell security holder, proxy holder or representative is welcome to attend and listen, but you cannot address the meeting or vote. No attendee can make a tape or video recording, except for the official one, without our consent. Before asking a question or making a comment, please show your voting or attendee card, etc., and state your name and if you're a proxy or a representative for whom you represent, and we will take it from there. The notice of meeting was sent within the required period, and I move that notice meeting be taken as read. Could I have a seconder, please? Any seconders? Thank you. All those in favour? Anyone against? I take it as carried. Minutes of the previous annual general meeting are available for anyone who wants to see the minute book if required. The first item on the agenda is the consideration of reports. Cromwell's 2016 annual report, which contains the financial report, the director's report, and the auditor's report of the company for the year ended 30 June 2016, has been made available to all security holders. This resolution for consideration by the meeting is intended to provide an opportunity for security holders to raise questions on the report and the performance of the company generally. I now invite discussion in relation to the annual report. Remember, please indicate who you are. A speaker will be brought to you, a microphone, and let us know who you represent and whether you're a security holder or a proxy holder, etc. Should we discuss this now? And any questions on the annual report generally? No? Just 1 second, we'll bring the speaker.
Excuse me a second.
Malcolm Badgery. I'm a proxy for the Australian Shareholders Association, and I represent, I think, about 1.2 million shares. So look, I was just wondering about the, is it IOF?
Yes.
Yeah. What was the price that we paid for the units in April, and how does that compare with the current proposed price that we're hoping to do a deal?
So firstly, we originally bought just under 10% of IOF at $4.24, I think was the exact price. Obviously there's a bit of stamp duty and stuff on there. And that we had made a proposal, as Paul explained to you earlier. It was what is effectively $4.45 a unit, on behalf of third-party equity and debt which we have in place to do the deal and manage it through.
All right, that's well. Look, the other thing that I was just worried about, or I just couldn't see. Do you include the date of appointment of directors in the report? I just couldn't find it in the annual report, but there are a number of different spots where one should look.
Now that is a very difficult and technical question, so I will ask someone who will know the answer to that. I don't know if we actually put the date, but I think we do put the number of years. Am I correct, Lucy?
Yeah, we've got first appointed the independent directors in the corporate governance statement under recommendations.
I never look at the corporate governance statement.
Oh, well, you shouldn't when you come to us. You should take it for granted.
Anyway, all right, very good.
But thank you for that. Are there any other questions, anybody, which you'd like to ask before we move on to the few resolutions, electing directors, etc.? No? I think everyone's dying to get to the tea and cakes. All right. So I'll move on to item number 2, which is the election of Ms. Michelle McKellar as a director. There is commentary relating to Michelle in the notice of meeting, which I take as having been read. The resolution itself reads that Ms. Michelle McKellar, who retires by rotation in accordance with the Constitution of Cromwell Corporation and offers herself for re-election, is re-elected as a director of Cromwell Corporation Limited. Here on the screen for you are the actual proxies that came in. Would any security holder like to speak in relation to this resolution? Yes, sir.
Thank you, Mr. Chairman. John Forrest, small unit holder. Could I just ask you, please, in relation to resolutions 2 and 3, to outline the particular skill set that these two directors seeking re-election bring to the board, and in relation to resolution 3, if you don't mind me putting it now, How do you overcome the difficulties of Mr. Weiner residing in South Africa?
Thank you.
Thank
Thank you for that question. Much appreciated. I don't know if Michelle herself, and there's a speaker there, would like to address it, but I can tell you I've worked now with Michelle for well over 6 or 7 years, I think it is. 9 years, wow. Time flies. I think I even might have had hair then, but anyway. And I can tell you that Michelle is an outstanding director. Her knowledge of property, which I'll invite her to perhaps tell you about her background, is actually international and really excellent. Michelle never misses a board meeting, notwithstanding she lives in New Zealand, but I think it's a little easier than flying always from South Africa. I would invite Michelle maybe to just, Michelle, why don't you just give everyone a little bit of a brief CV, if you don't mind? Sorry.
All right, I'll attempt to sort of cover it briefly, but my background and career for more than 30 years has been in commercial property. Started out my career in Australia and was appointed from Australia to establish the CBRE business in New Zealand, and ran that successfully for 12 years before being appointed as Managing Director of the Hong Kong office and Chief Operating Officer for Greater China. On leaving CBRE, I ran the global enterprises of the Gen Group of companies based out of Australia, and built up a property portfolio of commercial and retail investments of around about $1 billion, and many of those were development properties. So in 2006, I left the corporate treadmill and established the family business both in Australia and New Zealand, which I continue to work in, and I consulted back to my former companies. In terms of my career, given the amount of time that I've spent in property, I believe I understand property and I understand the business of Cromwell. I think we have a very challenging board and a challenging chairman, and I bring diversity to the board, and not just the obvious gender diversity, but diversity of thinking, of culture, of opinions, from living and working in various jurisdictions. And we as a board act very synergistically with the very same focus of maximising shareholder returns. So I'm not sure whether you want me to answer any further questions.
Yes.
If I talk to Mark?
So yes, you all can talk to Mark. We might as well answer the Mark thing first as well. So I'll let Paul talk to him. He can do a much better South African accent than me.
I'll use my native Australian if that's okay. So in addition to being the former chief executive and currently executive chairman of our largest shareholder, which of course brings with it a certain degree of alignment with our largest shareholder, Mark is a career real estate person, started Investec Real Estate, was the founder of Redefine Properties Limited, which is the second largest or largest, depending on the day, second largest REIT in South Africa. Mark established a subsidiary, Redefine International, in the UK, is an active investor throughout Europe. I think is probably one of the best fundamental real estate people you'd ever meet. He's incredibly commercial, and for those of you who are more interested in learning more about Mark, he has written a semi-best-selling autobiography called Making My Mark, which I'd recommend to all of you as a thoroughly good read. Mark dials in or is present at every meeting, except today, which, because of the AGM, we held at 2 a.m. South African time, so we excused him, but Andrew, his CEO, has attended the meeting in person, so distance has never been an issue for him, and on the weekly occasions he rings me from South Africa, I can assure you we're not out of sight or out of mind.
Yes. And the wonderful thing about our new world, and if you go into our boardroom or any of the other rooms, you'll see television screens and things. It is now very easy to communicate in many jurisdictions all at once. So we're in a world where I don't think geography plays as vital a role as it used to. And in fact, just before this meeting, Andrew and myself had just chatted with Mark. So he was very keen to know what was happening as well. So I think he's a very active and challenging director, and someone who I would highly recommend to anyone to have on their board, because he knows he's an instinctive expert in property, a real instinctive expert. I'm going back to Michelle though, who actually is much prettier than Mark, I can tell you, even if that's not PC to say. But if you saw Mark, you'd agree with me. Yeah, I think he'd be the first one to agree. I'm going to ask someone to second the proposal to re-elect Michelle. Thank you. All those in favour? Thank you. Is there anyone against? No. I call that as unanimously passed, and welcome back, Michelle. Thank you. I'm going to put up now for Mark Wayner, and you'll see a funny little thing up there, which I do want to mention. There are proxies against his election. Now, remember, proxies are only about 50% of the votes that came in, so it's almost irrelevant, but it's half of that. But 13%. So we were, this was unusual, so we decided we'd try and find out what the cause of it is. We discovered that there are some institutional investors who don't actually decide on how they're going to vote at meetings. They have proxy advisors tell them. Now, there are a number of proxy advisor groups, most of whom are excellent. However, one particular proxy group told its investors that Redefine holds, I find this absurd, that's why I'm telling you about it, Redefine holds 25.46% of the shares in the company. Accordingly, they should not have directors on our board representing more than 25.46% of the directors, and we have 28, not 24% of the directorships represented by our two directors from Redefine. Two problems with it. One is it's just ridiculous, and two, we're all going to have quarters of people eventually, because otherwise you're going to have a board of 25 people or something to try and get exact proportions. So I find it bizarre, but as a result, some particularly foreign people who probably just, have got 10,000 stocks in their portfolios and use these things to tick boxes, tick the box that way. So much for intelligent voting. Anyway, back to the thing on, sorry about that. Anyone who will second Mark's election? Thank you, sir. All those in favour? Thank you. Anyone against? No. Unanimously correct. Passed, and Mark's not here to tell him, but Andrew will no doubt tell him. Welcome back to Mark, and he really is a valuable director. Our remuneration report. This is our next resolution. The resolution reads that the remuneration report Cromwell Corporation for the year ended 30th June is adopted. I remind you that this is only an advisory resolution, and even if you voted against it, it doesn't matter. Okay, so but we do what the law tells us to do, and up there you'll find the proxies. Anyone want to second this resolution? Thank you. All those in favour? Anyone against? Carried unanimously.
One against, Chair.
Sorry?
One against.
Oh, sorry, one against. Sorry. Not carried unanimously. We then get on to the approval of the Cromwell Property Performance Rights Plan. And just in case anyone's worried about democracy, at the end I will invite all of you to ask questions again in case we missed anything earlier. I don't want to let anyone miss out. Approval of the Cromwell Property Performance Right. This is item 5. There is commentary relating to the approval in the notice of meeting, which I will take as having been read. Primarily, approval is being sought so that issues of performance rights under the Cromwell Property Performance Group Performance Rights Plan in the 3 years following the date of this meeting will fall within exception 9 in ASX Listing Rule 7.2 and therefore will not be counted towards Cromwell Property Group's placement capacity of 15%. To clarify, the approval does not itself approve the issue of any performance rights. It is more procedural in nature. In other words, in order to allow us, if ever we need to do a rights issue or we need to do a placement, we have only allowed to do 15% per annum, and therefore if we do in the future ever issue any performance rights, we have to make sure that we've got it counted within it so we don't have less than 15% to issue. So it's a procedural thing one has to do every 3 years to refresh those rights with the fact that in the next 3 years we'll be issuing these rights. I'll read the resolution for you. It's that Cromwell Property Group performance rights, the terms of which are summarised in the explanatory memorandum that accompanies and form part of the notice of meeting, and the issue of securities under that plan be approved for all purposes, including for the purposes of ASX Listing Rule 7.2 Exception 9 as an exception to ASX Listing Rule 7.1. Voting exclusions apply for this resolution, and those exclusions are stated in the notice of meeting, which is taken as having been read. However, if any security holder requests, I'm happy to have the company secretary read the voting exclusion statement. Does any security holder want her to read the statement? No. The proxies are up there for all to see. Would any security holder like to speak on this particular resolution? Or we'll just leave all the questions till the end? No? Okay. So, could we have a seconder, please? Thank you. Now, all those in favour, could you please raise your forms? Thank you. Anyone against? Make sure. No. Unanimously carried. Thank you very much. Now that we've dealt with all this specific business in line with the requirements of Section 250S of the Corporations Act, I'd like to give you all the opportunity again. Is anyone want to ask any questions about the business or anything of all of us? Anybody? No? For your information, we're all available if anyone wants to speak to us privately. The auditors here, as we pointed out, at the back of the room, he might just put up his hand. There's David Kirby, who's our current, looks after very well. He looks after our European business. So it's lovely to have him here as well today. And if anyone wants to have a chat to him about what's happening in Europe. Yes, sir. I see a question. No? Hold on 1 second. We'll get you the speaker.
Okay, thank you. A small shareholder, Len Krafchik's my name. Just a question. In the latest price movement of Cromwell, it was sort of dribbling down a little bit. Do you think it tends to raise a suspicion on my part that somebody may be short selling? Would you like to comment?
On the actual short selling, Len, I'm not sure what the statistics are, but I don't think
I think you can comment.
Yeah, I don't think I can, but
I was just wondering if...
yeah.
you know,
But generally, I think you'll find the A-REIT market as a whole has gone down a bit since the bonds have
Yes,
gone.
yes.
And just generally, I can't comment other than to say, at 90 odd cents,
I think there's
paying
been
out
some,
8.2, you can see quite a good yield there.
Yeah, just watching the buyers and sellers on the stock market, it seems to be that institutions have got their finger in the pie there.
Well, institutions, a lot of institutions are, and all around the world, not just in Australia, are linked to various, so we're in the ASX 200, for example, and a lot of them are what we call index weighted. So a lot of them, as and where you move within the index, they actually adjust how many shares they buy and sell of you.
Perhaps
Very
it's just my
intelligent, but that's how
suspicious
they do it.
nature, that's all.
Yeah.
Thank you.
Sorry. Okay. Yep. First you, then.
Mr. Chairman, John Forrest again. Do you have any comments to update us on your current perspective on the economic situation in Europe and also a Trump presidency United States, please?
Jeez, John, I could bore the hell out of all of you on all those topics, but basically, I mean, I think we've got to play our own game. It's clear to me that, you know, we saw the market have a Trump lift to new highs, seems to have come back a bit again. Who knows what he's going to do? The guy's not even in office yet. So I really think we just got to play what we can see in front of us, and we've got to play, you know, the game within the field that we can. At the same time, we've got to be conscious of these things, obviously, and make sure, for example, today the board had the chief economist of Biz Shrapnel come and talk to us, Frank. I think Frank's in the room here somewhere today. There he is at the back there, probably one of the best property economists, to ask him similar questions for our interest, you know, because we continually try and stay ahead of the curve to make sure when we make decisions on behalf of yours and ours, I'm also a security holder, he has money, that we're as informed as we possibly can. But at the end of the day, unfortunately, it's crystal ball gazing. I think Europe, all these things have double-edged swords. You know, for example, the fact that there's this dislocation in Europe, and it's mostly affects United Kingdom. Europe's the other big part of it, a large part of it, has created what appears to be opportunities to private equity funds. That's possibly good for us because we have a team in Europe who actually manage those people's money and look for deals for them. So I think what has happened is the world is a much more, you know, global community rather than lots of little countries. So that is something we have to be careful of. You know, if China or America do something, it affects the Australian economy. It affects the way, I mean, American long-term bonds went up, and so did ours. However, our short-term interest rates haven't, and, you know, there's talk of it coming down a bit or not going up yet, but our bonds completely followed what happened with America. So it's a global economy. But I don't think we as a board or we as a company can do much more than try and be really, really good at what we do, where we use our own money to invest directly into things. We're very, very careful to invest into property we understand, where we tangibly understand and believe will have value at the end or can add value. And we've sold properties. Probably people would think we're crazy to have sold them because you can buy them, but we feel that we need to be a little bit more conservative. We can take that money and recycle it into deals where we think we can get a better return. So I think that's the only way we can play that. And I think we've got an outstanding team here. Seriously, I think the Cromwell team, a lot of people around the room here, from investment management through to asset management to facility management to development skills to funds management. We have some of the best and brightest around, and I think that's at the end of the day what we're doing. You and I, we're backing them to make sure that they weather through all the different crises and things that happen in the world in the best way that we can. You know, none of us have ever seen a good horse win a race without a jockey. And all I can say is that I think we've got great jockey riding the horse for us, and we've just got to, you know, hang in there and make sure that they keep doing their job in the way that they promised they would. Sorry, there was a question down here.
Yeah, David Lou. I've been a shareholder for probably around 12 years, I suppose, medium size. My question is in relation to IOF, acquisition opportunity. It wasn't quite clear whether the opportunity is completely dead or is it still something there, and the circumstances sounds reasonably odd to me where Stanley Morgan could sort of undercut our bid price.
I think,
Have
yes.
I mistaken?
No, you're not mistaken. It is very strange. It's hard for me to do much more than comment because it's all happened in the last few days. So we went into, we thought we saw an opportunity. We think we still have, you know, we still think we've made a nice investment at worst. We've been getting a terrific return on money that would have been for us cash that we didn't find other things for. We could have paid down some debt or kept it for opportunities, but we're quite comfortably geared and all the rest of it. And we saw an opportunity. There's been a bit of dislocation there. We're building a bigger funds management platform, and this would be a great piece in the puzzle for us in the funds management. It's very heavily Sydney office space. There's a lot of reasons why we like what we like there. However, when previously you'll recall that Dexus had made a bid for this company, and we had bought just under 10% stake, which effectively blocked that at the time. When I say effectively, they probably wouldn't have got up the resolution anyway. And we were beginning to discuss what we would do with it with their board, but when Dexus had done their deal with the passport, they had a bunch of what I call landmines left behind. So for example, there was a $50 million break fee going to investment bankers and Dexus and whatnot if they sold to someone else in the next, I think until in this period of 9 months or so. So it was difficult for us to do anything anyway. As we've got closer to the end of that period, we decided to open further discussions again with the new independent board that's there. And what we announced is the board just rejecting even having those discussions with us. The strange thing about that was they rejected and said that at $4.45 the discussion wasn't even attractive for their unit holders on the same day as their owner bought shares from Morgan Stanley at a lower price, knowing that we were perhaps going to offer a higher price. Now, I don't know anything more than what I'm just saying, so I can't give you any commentary on what that means. It's up to all of you and regulators and others to work out what that means. But at the end of the day, I mean, if there's any smart journalists in the audience, I'm sure they're going to be digging around like crazy because it's just strange. But that's what happened. We're very comfortable with our investment we have there. We'd like to see a more interesting play. We've said that we're still available to go and do the due diligence or to look into it deeper. We would never go and run off without having an opportunity to look a little under the skirts more, because it's just you just don't rush into things like that, you know, in that way. But what we had done, and was very heartening for us, we had all the funding lined up if we were prepared to do it, which meant there's some very large and big institutional type investors who would have backed us with their money to pull it off because they think we have an outstanding management team who would manage those assets in an exemplary way. So that's all I can tell you at this stage. And I assume for the next day or so at least, or maybe longer, there'll be things happening in the newspapers, and we'll all read with interest because often they tell us things about us that we don't even know. So I don't know if Paul wants to add anything to that. Paul?
No, I think we'll all read it with interest what's in the newspapers over the next couple of days, Jeff.
It's going to be a bit of fun, what can I tell you? All right. Anything? Yes, sir.
I saw recently...
I'm sure the Shareholders Association's interest is going to be piqued by what the independent wholesalers have done in selling shares and stuff in
Well,
Ireland.
they're certainly very interested in that. But they also are interested in a project here in Brisbane. It was a property, I think you just made an announcement, you know, a week or so ago about... Anyway, can you tell us a bit more about that project, or is it just a prospect, or what's happening? So, and just remind me, is it in what street? Anyway, you know all about it, Paul, I dare say.
That is such a clandestine question. I'm going to leave it to Paul.
Now, if you can give us a little bit more information, Malcolm, that'd be good. Student accommodation.
Ah, okay, yeah, got it.
So if you look out the windows in the left there, you'll see two very ugly buildings. In fact, they're probably the ugliest buildings in Brisbane. No, believe me, they're much uglier. So we bought those buildings at about a 22% yield, and for the last nearly 4 years, we've been collecting the rent. The buildings owe us a very low entry price. and we have an opportunity to reposition it to alternative use. So having looked around at all of the opportunities in Brisbane, we think that given the site, given its proximity to transport and universities, that it will make a very good student accommodation precinct that will also offer very good amenity and very good retail options. So we've obtained development approval for the student accommodation. We are in the process of securing development approval for the retail component. And that asset, together with another asset in Melbourne that's being developed, will be seeded into a new student accommodation fund. Well, that's the plan. Our shareholder Redefine is planning on taking an interest in that. We'll take an interest, and we'll take an interest with the operator.
It's a classic example of how value add, where buildings, we managed to buy the building cheaply with an excellent tenant, the state government, who's been paying the rent on time and at a very good yield to us. And as the asset comes to the end of its life, we've found an alternative use, which is not only good for us financially, but it's good for the city of Brisbane too, because it's going to fill a need that's lacking at the moment. So it's a classic example of value add to a property. So actually, thank you for the question. Anything else? Any more questions? There being no further questions, I invite you all. Oh, I'd like to call on Paul, who would like to just say a quick word before we all go and have tea and scones.
So you, all of you will know how important our investors are to us, and in fact, all of our meeting rooms here in Cromwell are named after our original investors and those who've supported us the longest. In fact, our boardroom's named after Humphrey Firkins, who was probably our longest standing and largest supporter. If I digress for a moment, some of you will remember the legend of Trevor Gilmeister. Being proud Queenslanders, we all remember that. In a deciding state of origin, Trevor was in bed with a drip and pulled the drip out, got a cab to Lang Park, ran out and won the State of Origin series for Queensland. Well, we were concerned in recent times that Humphrey wasn't well and that he was in fact in hospital, and we didn't think we'd see him this year. He's had an exemplary attendance record at our AGMs. But in true Gilmeister fashion, he pulled out the drip, jumped out of bed, and he's here with us today. So thank you, Humphrey. But most importantly, today also is Humphrey's 92nd birthday. And so in recognition of that, and in a break from tradition for most corporate AGMs, we'd like everybody to sing him a happy birthday. So Humphrey, happy birthday. Happy birthday to you. Happy birthday to you. Happy birthday, dear Humphrey. Happy birthday to you. Hip, hooray, hip, hooray, hip, hooray. And so, in the absence of any other business lawfully brought forward or otherwise required to be dealt with, we formally declare the 2016 AGM for Cromwell Corporation Limited and the general meeting of the Cromwell Diversified Property Trust closed. Thank you for your attendance and support, and please join us for afternoon tea.